There is an indicator that not only predicts the near future, but even tells you how likely it is that the next candle will close at one point or another. It has won many awards in recent months, and even the community has voted it as one of the indicators of the year. In this video we are going to explain how it works step by step, and we will show you several strategies to apply it in your trades, and as always try to get the maximum profitability possible. Welcome to the Trader's Game. And before we start, remember that in the description you have the links to join us in our Telegram community, where every day we post charts and analysis of what is happening in the financial markets. And also the trading bonus page, which has been updated and have added new promotions and free bonuses for all those who are starting in the world of trading. Do not forget to leave your email if you want to receive a weekly newsletter with everything that has happened during those days. The first thing we have to do is go to the indicators part and look for breakout probability, in brackets Expo. As you can see, it even has the editor's selection mark, because it has been a real revolution in the trading world. We go to its configuration and we will remove this tab, which would be that little table that appears at the top right, which shows us how many times this indicator has been right, and as you are seeing it exceeds 60%. And of course because we are right now in the Bitcoin chart, you know that cryptocurrencies are even more volatile. But look at what happens if we go to gold. We have almost 64% positive. And even if we go to the SP 500 we would exceed 62%. Its operation is very simple, as you can see in each of these levels. After having automatically studied the last patterns and the last data provided by the previous candles, it is able to predict by itself, in percentage of probabilities, to which zone the next candle will arrive first. In this particular case, we would have a 30% probability that the next candle would reach this zone, and we would have almost a 60% probability that it would reach this zone. Of course, this information can help us to detect the next price movements, and combined with other types of strategies, we can get to know not only the next movements in lower time frames, but also complete market structures. Personally, in the configuration part 1 I'm going to lower the step percentage to 0.5, so that it will give us several closer zones with new percentages that can help us to have more information. We could even decrease the number of lines, but in my opinion the more information we have the better, because just looking at it from above, if we compare the whole area of percentages that is below the current price, we see that it is much higher than the percentages for the upper zone. So we would already have much more clear that by probability the price should go down. And not only for the first zone that has almost 60% against 30, but also for the second and third zone, which far exceed their expectations at the top. As for how we can use this indicator and all the information it provides us, the most basic thing would be to first look at the data it gives us in one of the higher time frames, for example in 4 hours, which is one of the most used, and in which it has already become clear to us that the price is more likely to fall. We could even mark both zones, both upper and lower, and then we would lower the time frame, for example to 15 minutes, which combines very well with 4 hours, and as you can see this first zone had a much higher probability of being touched to the downside, and so it has been. The candlestick has reached this area before. This information can help us, for example in the case of being with a long trade from this area. As soon as we begin to see that this upward movement is getting tired, because we see that there is also a fairly strong resistance area in this area here, which is preventing the price from continuing to rise, and as we had already seen in the previous candle that the probabilities were much higher that it would reach this point. Perhaps it would be more convenient to close that operation. Especially because also in higher time frames the probability is higher, so with that data we would possibly save a fall, and we would close at that moment our operation in profit. The second simplest way to use it is to mark ranges, support and resistance zones, and also to adjust our stop losses when we are inside a trade. And this is something logical, because if for example we enter at this point, and our indicator is telling us that there is a higher probability of reaching this lower zone than of continuing an uptrend, we can perfectly protect our operation by placing our stop loss in those zones where we already know that there is a lower probability of the price arriving. Even if we wanted to take profit in this first zone, where we have much clearer that probability, we would put the stop loss also just in the first opposite zone. And here, as you see, what would mark our operation is that we would have almost a 60% chance of touching take profit and leave with benefits, and 30% that our operation would turn around and fail. As you can see, we can apply it to many different strategies, but I am going to tell you about a very simple one where we will use this indicator, 10 different moving averages in just one indicator. In configuration, we are going to mark 3. You could mark many more to your liking, but we will use only 3 exponential moving averages. The first of them of 30 periods, the second of 50, and the third of 100, and here we would change the colors to our taste. I have put them of these colors, we give to accept, and we would already have them. Using this set of averages, in this case in 15 minutes, we can take advantage of the information that this indicator gives us to get good entry points, where it would give us the different probabilities of breakout of these averages and structures. At the same time, we can use the basic knowledge of trading to confirm or not the breaks. Here you can see that we effectively had that 65% a few minutes ago, when the candle was even lower, and as you can see it reached that upper zone. What we could do now is directly mark the trend line that we have in this structure, and look when just close this candle and the percentage that will mark us in the next, because in the case that the percentage of the upper zone is higher than the lower one, we would have a practically confirmed break, and we would have more chances that the price would continue to rise, not only for those percentages, but also for the information of the break of this trend line. It is a very basic example, but I think you understand what I mean, because in the case that the higher probability was that of the lower zone, there would be more likely not to break that trend line and again begin to fall. So this indicator gives us the information of what can happen a few minutes before, which are key, and that we can take advantage of to position ourselves in one way or another. And at this point, I sincerely encourage you to try this indicator, to adapt it to your own strategies, because it has an incredible potential, not only for the information it gives us, but for that prediction of the near future. Imagine all the ways in which you can take advantage of it. And thank you very much for watching us one more day. If you like our work, leave us a nice like, which is completely free, and do not forget to stop by the description, where you have our free Telegram community, and various bonuses and promotions on the best trading platforms in the world. Again, thank you very much, and see you in the next video of the Trader's Game.